And good afternoon and welcome. A really warm welcome to all of the City UK's members who've joined this call, but a particularly warm welcome to the Minister we have with us today and our panellists and Anjalika Bardalai, the author of this report. I'm going to say a few words of introduction and then hand over to the Minister, and then Anjalika will present the report, and then we'll go to our fantastic panel. So we're here today to launch the City UK's flagship annual publication, Key Facts About the UK as an International Financial Centre. The report highlights trends in the financial services sectors and as well the key role of as the UK as a provider of professional services. It also highlights the great success of financial services exports. Indeed, financial services industry is the biggest exporting industry in the UK, generating a trade surplus that exceeds all other net exporting industries combined. And indeed, we see in the report that the UK's financial services trade surplus in 2020 is almost as much as the next two biggest financial services exporting countries combined. The report also highlights, and I think we'll get into this into the discussion, future areas of growth for our industry, such as green finance and fintech. The City UK's report also looks at the EU, that also highlights, and this has been picked up by the Financial Times today and other publications, that the US has overtaken the EU as the leading destination of financial services exports. We're very focused at the City UK not only on championing the financial and related professional services ecosystem, but also on working with government and the regulators to ensure that we maintain and enhance our competitiveness. And that's why we're so delighted to have Ranil Jayawardena with us today, the International Trade Minister. I will introduce him in just a minute. But just a word about our international strategy that looks exactly at that issue. How do we enhance our competitiveness going forward? We launched this strategy a couple of months ago, and it provides a framework for how the City UK and our partners can meet the objective of making the UK the world's #1 leading international financial centre within the next 5 years. But we can only do that by working in partnership with the government and others. And it focuses on 4 areas of future growth for the industry. Firstly, risk management. Secondly, data. Thirdly, ESG and sustainability and sustainable finance. And fourthly, the UK is a gateway for international investment. Now, our report today is very timely because we know that the Secretary of State for International Trade, Anne-Marie Trevelyan, is in the US at the moment and met with her counterpart in Washington yesterday to discuss how to develop the relationship between the UK and the US in terms of our export and trade relationship. So it's a particular pleasure for me to introduce Ranil Jayawardena, Member of Parliament, who is the longest serving international trade minister, as I understand it. Ranil was elected to Parliament for the constituency of North East Hampshire in 2015. And prior to that was a councillor, but also worked at Lloyds Banking Group and is a freeman of London. Ranil, could you join us? We're absolutely delighted that you've taken the time today. We know it's a busy time in Parliament, and we're really looking forward to hearing what you've got to say. You're doing a great job on behalf of the country in leading those negotiations over free trade agreements and other agreements that will benefit our industries and others. So over to you. Thanks so much for being here.
Well, thank you, Emma. Thanks for the kind introduction. I'm delighted to be with you today. As you said in your introduction, I'm formerly of the city, delighted, proud to be a freeman of the City of London. And, it's a great privilege to serve as Trade Minister at this pivotal moment in Britain's economic history, alongside a great team of people, both in the past and today. And with all sorts of uncertainty around inflation, protectionism, and of course, the latest COVID variant, which you will know that teams are working on around the clock to get a better understanding of, to hopefully ensure that this Christmas is better than the last. It is also a moment of optimism. Look, I hope very, and it's a moment to reassess the nature of the global economic landscape left in the wake of the that landscape is changing rapidly. The global economy is becoming ever more services oriented, with the services sector expected to account for 77% of GDP by 2030. And the aero engine sold as a miles flown and maintenance package, or a clean tech license, for example. And at the same time, whilst Europe will continue to be important, rising incomes in emerging markets are shifting the centre of economic gravity towards the growing markets of the world-beating digital and services sectors, our unrivaled international networks and innovative startups. I believe that the United Kingdom is uniquely well placed to seize those opportunities. And I have no doubt that the financial and related professional services sector will have a crucial role to play, because above all, this sector is the engine of our economy, powering growth in both the United Kingdom and around the world. And as the City UK's new report highlights, it is one of Britain's most successful industries, with the leading share in many international financial markets, including cross-border bank lending, insurance premium income, forex trading, which the City UK estimates generated a trade surplus of almost £80 billion last year, even in the face of the pandemic. And Britain also leads the world in specialist areas like green, Islamic, and maritime finance and fintech, employing over 76,000 people. Not to mention, of course, the legal, accountancy and consultants that together make our financial ecosystem unmatched anywhere in the world. Our financial and related professional services sector is also a magnet for direct investment into the United Kingdom, often attracting more than double the inward investment than any other sector. And it enables, through that, exports and investment in every part of our United Kingdom, with 58% of businesses and 63% of jobs located outside of London and South East, with major hubs in Belfast in Northern Ireland, Edinburgh and Glasgow in Scotland, Cardiff in Wales, Birmingham, Manchester, Bristol, Leeds, Liverpool, Sheffield, and beyond. This is a great industry for the whole of our United Kingdom. And the innovative tech solutions and data analytics that are being pioneered in the city today are helping British businesses identify the risks and work towards their goals tomorrow, creating new digital delivery models for services, pioneering new ways of reaching distant markets, revolutionizing the way that companies do business, enabling them to reach a wider consumer base, trade more efficiently and cost effectively, and transforming our daily lives, whether that's streaming TV and music, sending money to our friends, buying our morning coffee with a smartphone. There is so much going on and so much to look forward to in the years ahead. The city is also playing a key role in supporting this government's groundbreaking pledge to reach net zero by 2050 through our commitment to building a world-leading net zero financial system, including new sustainability disclosure requirements, moving towards the making of transition plans mandatory for the financial sector, and also setting up a transition plan task force. And of course, many here, including Gareth Davis, would want me to, of course, reference the United Kingdom's first green gilts issued this year. From sovereign wealth funds to green investors to ESG initiatives and pension funds, this sector is creating green jobs across the United Kingdom, unlocking the potential for the private sector to transition our economy from decarbonisation projects to green energy, to greener forms of transport, and providing, in the midst of all of this, amazing opportunities for dynamic, innovative British businesses to sell their cutting-edge sustainability solutions all over the world as countries ramp up their efforts to decarbonise too, following the historic commitments made at COP26. And this government is determined to build on these amazing events, harness innovation and expertise to meet the global challenges that we all face, including responding to the recommendations of the Khalifa Review of FinTech to support its growth, widespread adoption and global reputation, and Lord Hill's listing review aimed at strengthening the United Kingdom's position as a leading global financial centre. Our goal is to boost our international engagement, create higher paid, more highly skilled jobs in every corner of our United Kingdom. That's what we mean by levelling up. And that means building a global network of next generation trade deals that drive productivity, jobs and growth in all areas of our United Kingdom and across all sectors of the economy. In turn, firing on all cylinders again and driving growth. And it means forging a path to the future with pioneering services and digital provisions in our trade agreements, improving market access, seeking to reduce the frictions that might exist, as well as expanding mobility and mutual recognition of professional qualifications. We've already set a gold standard for digital trade in our trade deals with Japan, for example, including greater transparency, streamlined application processes for British firms, reduce regulatory friction. And we're forging groundbreaking deals with Australia and New Zealand, both of whom have advanced digital chapters. And through our G7 presidency, we have successfully negotiated trade and to shape the rules of the global economy. As an independent trading nation for the first time in almost 50 years, the United Kingdom is going further and faster than any European country in exploring the supporting growth at home, but reducing inequality and fighting poverty around the world. And our world-leading financial and related professional services sector will be at the core of that mission, pioneering the solutions needed to respond to the challenges of the digital revolution, the global economic pivot eastward, and increasing the importance of digital and services trade. Together, we can power forward this green, clean revolution. The new jobs, the investment that will unite and level up every part of our United Kingdom. And this government recognises the vital role that you have to play. Working in partnership with the sector and organisations like the TheCityUK, I can assure you that we will be backing you every step of the way. Emma, thank you for inviting me along today.
Thank you so much, Minister. Thank you for the kind words and the importance that you've given our industry. The digital and services trade that you talked about, we're going to be exploring in our panel a little later, and also the role of the industry in our transition to net zero. So thank you so much for those remarks. You've really set up the launch of our event very well indeed. And thanks again for joining us, Ranil. So without further ado, I'd like to introduce our chief economist, who is the author of the report that we're launching today, Anjalika Bardalai, to present the key findings. Over to you, Anjalika.
Okay, thanks very much, Emma, and good afternoon, everyone. It's great to see so many people here virtually for the launch of our latest economic research reports. I thought I would start, as I normally do with these things, by putting our new research in just its broader context. So we are going to be talking today about the UK's particular role as a leading international financial centre, but I wanted to start by reminding you of its economic contribution overall. So if we could go to the next slide, please. We can see some points here that are probably familiar to you, but I do think it's worth remembering before we get into our more detailed discussion that the industry is a major taxpayer, a major employer, and also accounts for around 10% of total UK economic output. So that's the national contribution, but as we know, we are here today to talk about the UK's particular role as an international financial hub. But I would also remind you that these two aspects are very linked. I'm going to slightly adjust my microphone here just in case it makes it easier for people to hear. Hopefully that will be a little bit better on the sound front. So the link between the international and the domestic aspects of this economic contribution. One of the points that we make in the research that we're launching today is that the UK's strong international position in financial services makes a direct positive contribution to the domestic economy. And one way to demonstrate this link, you can see here on the next slide, please. So these graphics are actually from the research that we launched last week. And that report was about the contribution that the industry makes to all the different regions and nations across the UK. So the chart on the left shows you that financial services productivity is around twice as high as productivity in the UK economy as a whole. We used ONS data on output per job, which is one standard measure of productivity. The others are, of course, output per hour. You can look at output per worker. But output per job is about £58,000 for the economy as a whole, but around £115,000 for financial services. And that difference is in evidence not only for the UK, but in every region and nation within the UK as well. So textbook economics tells you about the link between productivity and wages. And so the table on the right-hand side of the slide kind of complements this data in a way by highlighting that across the UK, median earnings in financial services are higher than median earnings in the economy as a whole. So the UK average is around £26,000 overall, but it's around £40,000 for financial services. And research is also very clear that there is a positive correlation between exporting and higher productivity. Now, a lot of academic research makes a causal link asserting that exports drive productivity growth. Now, this is obviously a pretty vast area, and we don't have time this afternoon to go into all the details of the how and why, but do bear this relationship in mind as we consider this data. On the next slide, please. So this is from the report that we're launching today, and it shows you just what a strong exporter the financial services industry is. So the chart on the left with the red bars shows you all the sectors in the UK that generated a trade surplus in 2020. As you can see, they are mostly service sectors because the UK runs a structural deficit in trade and goods and a structural surplus in trade and services. Some goods sectors do generate a surplus, and so just for the sake of completeness, we aggregated these surplus generating goods sectors, and those are the ones you see in the aggregate in the last bar at the bottom of the chart. But what you can see is that financial services generated the largest surplus by far, and the second largest surplus was generated by the wider category that includes the related professional services of legal and accounting and consulting. Now, how does that surplus compare to other countries? Well, that's what you see on the chart on the right with the green bars. So using a different data set that allows international comparisons, we found that the UK has the world's largest trade surplus in financial services, totaling around $80 billion US. And we then did our own estimates to add to that the surplus of the related professional services, and we found that the total industry surplus is around $100 billion US. Now, the surplus is obviously generated because the sector exports more than it imports. And so it is also worth taking a look at where these exports go, which is what you see on the next slide, please. So here you can see what we find was that the US was the largest destination for UK financial services exports in 2020, representing 34% of the sector's total exports. And as a bloc, EU countries are the other key market, representing 30% of total sector exports. So in a way, I think you could say that sector exports are actually quite highly concentrated because these two regions, as you can tell, account for fully 2/3 of total sector exports. Now, that's the kind of analysis that we feature in the first part of our new report. In essence, we have data highlighting the sector's international competitiveness in macro terms. And then in the second part of the report, we look a little bit more at the micro level and we examine the international orientation of the sector on a subsector by subsector basis. So here on the next slide, please, you see that UK banking and fund management are internationally highly competitive. The UK has the third highest value of banking assets in the world, just after China and the US, both of which are countries that, of course, have much larger economies than the UK. The UK is, in fact, the world's largest center for cross-border banking, with 15% of the global total of cross-border lending and 18% of the global total of cross-border borrowing, both of which were the highest percentages in the world, and that's according to our calculations based on data from the Bank for International Settlements. You can also see that when it comes to core investment management assets, the US is really in a league of its own in terms of assets under management, but the UK then features prominently among the small handful of other countries with significant assets of this type. So these are just a couple of examples. Our report examines both debt and equity. It considers a range of indicators that in the aggregate present a picture of the UK's international competitiveness in financial services. And then finally, on the last slide, please, we do consider some of the specialist financial services markets like green finance, Islamic finance, and fintech. So many of these areas are, of course, by definition, internationally oriented. But we make the point that UK expertise and competitiveness in some of these specialist areas enhances the country's credibility as a full-service global financial hub. And we also talk about the UK as a global provider of professional services. So again, expertise and competitiveness in legal and accounting and management consulting services, as well as financial services, education and training, does complement the competitiveness in financial services, and it bolsters the country's position as an international financial center. So just to wrap up, I think the message that I would leave you with is that there are really only two full-scale, globally oriented financial services centers in the entire world, and London is one of them. The other one is obviously New York City. And that strong international position has direct benefits for the UK's domestic economy, given the important role that the industry plays, not only as a direct contributor to growth, but also as a facilitator of growth in other parts of the economy. I hope that's given you a good sense of our research in this area. So with that, thank you, and let me hand back to Emma.
Anjalika, thank you so much. That has given us a great overview of the key findings, but I would recommend the report to everybody on the call, our members, and thanks again, Anjalika, for that excellent presentation. I am now delighted to introduce our distinguished panel. If you'd like to reveal yourselves to the audience. And I am going to introduce our panel, then I'm going to come to them in turn with some questions. So firstly, a big welcome to Dr. Robert Barnes. Robert, thank you so much for being with us. CEO of Turquoise Global Holdings, which is the UK, Swiss and European share trading platform, which is majority owned by the London Stock Exchange Group. And Robert, you're also Group Head of Securities Trading at LSEG, and responsible for capital market securities trading businesses globally for them. And so you've got vast experience in capital markets. Really looking forward to speaking to you about that element of things. And we're really pleased to have your involvement also in the City UK's Market Advisory Group on Switzerland. Thank you, Robert. And we've also got Dr. Dr. Stephen Woolcock with us, who's a senior fellow at the London School of Economics, a great expert in trade, taught at the LSE for many years on international political economy, trade and economic diplomacy, and established some years ago the International Trade Policy Unit to bridge the gap between academic and policy work. So thanks so much, Stephen, for being with us. And last but not least, Emma Rachmaninov, who is a partner at Freshfields, Bruckhaus, Deringer, and has a wide range of financial services regulatory experience, and indeed regularly advises, firms across our membership, I would say, investment banks, financial sponsors, custodian, asset managers, insurers, and others. And very excitingly, Emma is a member of our Next Generation Leadership Council, because at the City UK, we think it's incredibly important to engage with the leaders of the future. So thank you, Emma, for being with us. So Robert, first to you, I'd just be really interested in the view from Turquoise and from LSEG about the UK's position as one of the leading international financial centres, and why you think global businesses come here to list. Over to you.
Well, how do you do? And thank you very much. And firstly, may I commend the City UK for this excellent report. I think we should all feel a sense of pride in being the home of the International Financial Centre. And it's our privilege at London Stock Exchange to have helped companies and sovereigns that operate in more than 100 countries raise capital. A high number of listings reflects the world's global economy. And if we start by looking at the humble market operator that is the London Stock Exchange, we've been pleased to welcome over 110 new companies raising over 16.5 billion sterling from a range of different sectors from across the UK and also from around the world. We have more equity cross-border listings year to date in 2021 than other exchanges outside of the United States. And London Stock Exchange is the only exchange outside the United States to have attracted IPOs from more than 10 different countries this year. But fixed income is another important asset class, and we've had significant sovereign bond switches from Dublin and Luxembourg to London this year. We've had 130 bonds on our international securities market raising 51 billion compared to last year, 90 bonds and 38 billion. And increasingly, we are a market that reflects the global economy, with tech and consumer internet IPOs making up a rising proportion of listings in London, accounting for more than 40% of all IPO capital raised on the exchange this year. One great example is Oxford Nanopore, a cutting-edge technology that successfully listed on the standard segment in October. It raised £603 million. The market cap now is 5.6 billion, up from 3.4 billion at IPO. The sustainable bond market is also very active. Almost 100 bonds on the sustainable bond market have raised 49 billion to date in 2021, bringing the total to more than 300 active bonds, over 100 billion in total debt capital raised. And in September 2021, we're very honored and delighted the UK government listed its 10 billion inaugural green gilt on London Stock Exchange. It is the largest sovereign green bond to list on the London Stock Exchange. And with a listed funds market, we witnessed a strong growth this year with 251 exchange traded products to November, compared with 174 the same period last year. And within exchange traded products, we have ETFs, 80 new ETFs listed with an ESG methodology, and that's nearly half of all the new listings year to date. So, it is our great privilege to be able to serve those listings. But the final example I'd like to share with you is that once a company lists, it's the quality of our secondary trading with all of the community that are on this call that actually enables us to offer multiple execution channels to intermediaries and investors. And that further adds to the attractiveness as London, a financing center for issuers. And the one example I'd like to share with you is the success of Wise's direct listing. So many of you know, previously called TransferWise, LSE successfully launched its first direct listing of Wise, which was the biggest IPO from a technology company in the UK to date in July of this year, by way of an innovation, an extended auction process so that all the market could participate in the price discovery on equal terms and within a limited period. It was another clear demonstration that the global tech companies can build, scale up, and go public in London. And the secondary trading to the end of November in just this one security had 2.5 billion sterling of turnover. And that includes buyers and sellers split half of the activity intraday on the primary, a quarter of the activity on Turquoise Plato, which gives you midpoint and price improvement, and another quarter on the closing auction, which is the record of reference for index constituents and fund values. Together, that provides a unique and unparalleled trading liquidity profile available via a single connection compared to any other exchange group worldwide. Wise is now a £10 billion market cap company, and we expect to see more companies choose this route to the future. So with that, I'd like to just say a final word to say thank you very much to our clients and customers, to our advisor community, to the City UK, because together as our community, we can continue to grow. Thank you very much.
Thanks, Robert, and we'll come back to you with some questions. And I would encourage the audience to pop your questions in the Q&A. So thanks so much, Robert. That's a really fantastic way to start this panel. Very optimistic vision for the city and financial services and related professional services more broadly in the UK. Now, Dr. Stephen Woolcock, the Minister stressed the importance of services trade, and in particular, the importance of digital trade. And this is something that you've got great expertise in. I wonder whether you could talk us through the direction of travel on this kind of trade going forward.
Yes, thanks very much, Emma, for the introduction, and thanks for the invitation to participate in this session. Yes, I'd like to talk about trade. I think it's worth making the point right at the beginning that international competitiveness depends as much on the domestic ecosystem, as it was called in the recent strategy paper of the city. Trade can be important. It obviously is a factor in assuring access to foreign markets. And it's probably particularly important in this whole dynamic area of digitally enabled services, exports. So I thought I would just give some illustrations of the tasks ahead, really, in this field, drawing on digitally enabled services trade. So I think the strategy paper is well worth reading. I think it provides a significant contribution to understanding the nature of how you deal with ensuring access to markets. And a couple of points there. First of all, as we all know, I think any barriers to market access in business services, financial services tend to be due to regulatory divergence or differences or friction, I think the minister called it. Secondly, dealing with these issues is generally of long-term nature. It's a long-term task, not something that can be achieved very short-term. And in the strategy paper, there's a very useful graphic which plots value against effort. So you can reap the sort of low-hanging fruits, as trade negotiators like to call it, through a fairly quick deal, perhaps. But those of real value take a long-term and considerable and sustained effort in order to achieve them. So the strategy paper talks about the multifaceted nature of this task. Let me just give you some illustrations of this. So you have the task of trying to establish agreed international standards. Now, this can be in trade, it's in digital trade, it's in financial market regulation as much as anything. And working on these standards in detailed technical bodies like the UNCITRAL, an international body, is a key building block, if you like, of a future inclusive rules-based system. So, for example, the work on e-commerce underway in the WTO at the moment builds on these kind of standards, equally on work in the OECD. So that's the first point. This is detailed technical work on on the building blocks of international agreements. But then from the point of view of the UK, it's important to ensure that these are then integrated into preferential trade agreements. So the trade agreements that are being negotiated should rest ideally on these agreed international standards. Likewise with plurilateral negotiations. So the plurilateral negotiations are, for example, the work on domestic services, domestic regulation of services. This is something left over from from earlier trade negotiations, where there's been a recent agreement now on the adoption of basic principles in terms of domestic regulation of services. These are looking at enhancing transparency and therefore facilitating market access. So these, that represents, if you like, another aspect of this multifaceted approach. And it's one that's multilateral. So the recent agreement on domestic regulation of services, although it's negotiated by just 67 parties, so easier than negotiating a full agreement of the WTO with 160 odd countries. This agreement is being extended on an MFN basis, most favored nation basis, meaning that it's being opened up, if you like, multilaterally. So this is one way of getting around gridlocks, blockages in a multilateral system that can help to ensure an open rules-based trading system. I know you don't want me to talk for too long, and as an academic, I can carry on for a long time. So just to say that the UK's interest, and I think including the interests of the city and all those services which in future can be delivered digitally, the interests are in an inclusive rules-based order. And that's something that I think is an interest shared by many countries. There are only two real players in the world that can survive in a more power-based system, and that's China and the US. So the UK has a lot of potential allies in working towards this kind of an inclusive, rules-based multilateral order. I better stop there.
Thank you.
No doubt there will be some other questions coming.
I'm sure. Thank you so much, Stephen. That's given us a lot of food for thought. Emma, I'd love to get your perspective on all of this. So, you know, from the professional services and particularly from the legal services perspective, you know, it's a great strength, as Anjalika set out, the fact that the UK has that full service international financial centre and that broader related professional services ecosystem, even though we've had Brexit, and that was controversial, but that, you know, that is quite a recent thing, and we've had a terrible, continue to have a terrible pandemic. The industry as a whole seems pretty resilient. Well, why do you think that is? Why are people still attracted to come here to invest in the UK and do business here?
Yeah, and thank you for having me. I think I'll give sort of a professional services view blended with what I see my clients' views as expressed to me as well. So hopefully it's a bit more of pulling the industry together. But I mean, I think that the thing that comes up time and time again is the pool of talent that the UK has. Now that is expressed in domestic talent, which is something we need to really focus on going forward, because we're only ever going to be as good and competitive as the people that we have doing the jobs. But also in terms of attracting international talent to come to the UK. And that's incredibly important for us and professional services firms, you know, attracting diverse people, diverse thought, diverse experience, to make sure that we've got the sort of blended skills that we need. I think the flip side of that is people voting with their feet. So whatever anyone's views on the UK withdrawing from the EU and the sort of many years of Brexit structuring projects that I worked on with clients, time and again, what people would say is, well, we may have to have a different structure to offer the services in a way that complies with, European licensing requirements. But the vast majority of our people want to stay in the UK because they like living here. They like the environment of living here. They like being welcomed. It's cosmopolitan. It's interesting that it has this real blend of people, both homegrown and from overseas. So I think it's that combination of keeping it attractive for people who want to be here, but also making sure that we've got that talent coming through. I think from the advisor's perspective, so it's the ecosystem point again, perhaps the pandemic has undercut this point slightly, but it used to be the refrain that, I can snap my fingers and I can have my lawyers, my management consultants, my accountant, whoever it is, I can have them in a room tackling whatever sort of really knotty problem I have in front of me or whatever exciting opportunity I want to pursue. So I think that is really relevant. And that's what we see, our clients from outside the UK wanting us to work with them on. So, my client base is not UK predominantly. It is very international in its nature, and they'll want to come to us to help them solve problems sometimes, and quite a lot of the time, even where there is nothing in the UK that is part of that transaction, for example. So that's a regular feature. English language, English law, English courts, the judiciary, that is still a very important part of why people would choose not necessarily just to do business in the UK, but that broader sort of export of quality and certainty. And we obviously need to keep investing in the judiciary and making sure that we're at the forefront, because there are other jurisdictions which are building their sort of reputations in that way. And I think that the final thing I would say is this sort of generally pretty consistently reliable regulatory framework. Now, that doesn't mean regulation doesn't change. Of course it does, and it should, it ought to, it has to. But it is generally in a way where if there were certain requirements, you could rely on that being what the requirement was. It doesn't flip suddenly. There tends to be an engagement, a policy engagement with industry. Change is well signaled. And it's about making sure that we maintain that, because that is very attractive to people wanting to come and do business in the UK. But also that the regulatory framework, as we change it in this country, and the policy framework, we're balancing that desire to be a gold standard jurisdiction to come and do business in, but also being competitive. So I think for me, from a professional services perspective, there's some of the key factors. I'm sure there are others would raise, but for me, that's really important. So it's building on the strengths that we have, but making sure we're looking into the future so that we can keep delivering on that for our UK-based clients, but also the international clients.
Great. I think that's a fantastic coming together of all those different things. Now, I'm going to ask you all about a similar thing now, because, and it picks up on your last point, actually, Emma. You talked about sort of the future areas of growth. Now, the Minister was very focused on the role of the industry in the transition to net zero, and also in fintech. And I wonder, Robert, from your perspective, how important is it, and what more can we do in the UK? We do see some of these tech companies and fintech companies going to the US, for example. But what more can we do in the UK to ensure that we are at the cutting edge in these new future growth areas?
Well, thank you very much. I would say, a year after the end of Brexit transition period, it's a good moment to reflect that despite the concerns that were raised before, the UK does remain the global financial center. We've got a winning combination as a global hub, an internationally recognized legal framework, deep advisory network, the gold standard regulation. I agree with our previous speaker, and of course the time zone, sitting centrally between the US and Asia. And if you think about the importance of London as a center for global equity trading, we've got 352 foreign companies listed on the London Stock Exchange. And what makes the UK capital markets unique, and something we should continue to champion, is that we do not just allow foreign companies and investors to transact through London, we actively encourage it. 38% of all companies listed on the LSE are not UK companies. Over half of all the securities listed on the LSE are owned by investors outside the UK. And we have the most active public market outside Greater China and the US. So in terms of an appetite for change, issuers have also been drawn by our appetite, a willingness to embrace reform. The momentum behind the listings review has been a key factor in increasing the attractiveness of the UK as a listing destination. Issuers regularly tell us about the Lord Hill review and its recommendations, even when they have not been implemented yet, as a reason for choosing today the UK. The first SPAC, SPAC, that's a special purpose acquisition company, it just listed in London under the reformed regime and the recently announced reduced free float and dual class shares. They will appeal to prospective issuers. Ultimately, financial centers that connect can thrive, and strong connections with other international centers make a lot of sense. When you think about our openness, earlier this year, I think one of the great features of the City UK and the community of bringing actors and decision makers of the public sector and us as humble practitioners in the private sector together. When you think about literally within a month after Brexit, the unique relationship between the UK and Switzerland, we were able to immediately renormalize trading relationships between stock exchanges. That allowed investors immediately to respond positively on the very first day. And with trading occurring in the UK and settling in Switzerland, we have a mutually beneficial agreement. And that is why we say financial centers that connect can thrive. Thank you very much.
Thanks, Robert. And before I come to Stephen, Emma, I'd be really interested in your view of this. I should have said that in the Key Facts report, we have sections on green finance, on fintech, and indeed on, as the Minister mentioned, the role of the UK in maritime business services. Emma, do you think, interesting in your reflections on what Robert has said as well, the Hill Listings Review, how important are some of these specialist areas and some of these reforms to enhancing our competitiveness going forward?
You're going to ask me about maritime.
No, it's okay, I won't.
No, I was definitely going to give that a hard pass. No, I think it is. I think it's about looking at, what is it that makes a capital markets perspective, what is it that makes issuers choose the UK? And there's a whole range of factors, which will be, the quality of the exchange, the well understood, the easily understood and implemented rules, the commercial reality behind what you're trying to achieve with the rules, how the regulator looks at that. It's all of those expectations that are super important when you're thinking about where you would want to list. I think one of the other points is obviously, the strength of the buy side in the UK as well is incredibly important. The pool of liquidity that we have here, the quality of the managers, the disclosures that will be required, how that will hopefully be standardized to make a more coherent, set of standards and data that will go out into the market and then is more easily consumed, and underlying investors actually know what this means. And that plays right into sustainability. And it really just smoothing that path so that it's a coherent narrative as to why you would come here is incredibly important, because it attracts so many other parts of investment into the UK. So I think that you made the good point. It's not just looking at listings, it's looking at what else comes out of that and the additional attractions and investments into the UK.
Thank you. And Stephen, you said earlier that one of the barriers to trade and frictions is divergence. How important is it, not just for financial and related professional services, but more broadly, that we get the rules consistent? So in a lot of our members say to us on ESG, for example, we want consistency. On taxonomies, we want consistency. Give us a broader view from where you sit on these things.
Yes, as Emma Rachmaninov stated, regulations change, but you need to have predictability in the functioning of those regulations. So regulations here will change, but regulations in other markets will change, and you need consistency in how your exporters are going to be treated in those markets. You need some form of due process, transparency, in order to be able to sell financial services or professional services into those markets. So that's, if you like, the substance of what the negotiations on standards or trade agreements is all about. So it's really the reverse, if you like, of ensuring that your exporters are treated in a transparent way. So there are different degrees to this, so you can start off with transparency of rules. You want transparency, you want non-discrimination, but you may want equivalence. So you may want to reach an equivalent agreement with a different market, so that our regulations are seen to be equivalent to theirs, and therefore that facilitates trade. That's a bit harder to negotiate. And one point with equivalence is that the way, using this term as it's used in trade policy, the discretion, ultimate discretion lies with the host regulator with an equivalence agreement, as we know from the EU context. So that offers some degree of predictability, but it's not guaranteed access. If you want guaranteed access or assured access, you go for something more, which is, or you may be able to negotiate an agreement between professional bodies on mutual recognition of qualifications. So these, an example with fintech, how this relates to fintech. Well, there are some key standards about data protection and treatment of data, which can create difficulties, data location provisions, which can cause barriers to access in the fintech sector. And if these aren't, this is a very dynamic field at the moment, and a lot is in play in the different agreements. But if that's not managed properly, it can create barriers at the margin to access in markets.
Thank you.
Yeah, I'll stop there.
Wonderful. Well, I'm going to bring us to land on the hour. I think it's been brilliant to have all of your different perspectives. Emma, from you, the professional services perspective, but as you say, working so closely across the financial services industry, bringing that to the fore too. Robert, thank you so much for your very optimistic and a really forward-looking vision for capital markets, and we're very pleased to see the success of Turquoise and indeed at LSEG, and thank you for your involvement in the Swiss and Market Advisory Group. And Stephen, you were just touching on that, I think, on mutual recognition agreements are something that we're very interested in seeing how that progresses between the UK and Switzerland, and whether that can be a model for future agreements with other countries around the world. And thank you, Stephen, for the broader base that you go to our discussions around the importance of exports and trading with the rest of the world. So I think I would just encourage all members who've dialed in to read our key facts about the UK as an international financial centre, and say that we are confident but not complacent about our competitiveness, and we will keep on banging the drum, but also banging on the government's door to make sure that we work in partnership with them and the regulators to ensure that we continue to maintain and enhance our competitiveness as an international financial centre going forward. Thanks again to our panellists, thanks to the Minister, and thanks so much to Anjalika Bardalai, the author of this report, and to our audience. Thank you and have a good afternoon. Thank you. Bye-bye.